Okay, so in this video, I'm going to update you guys on where I think Tesla stock is headed moving into 2021. We've seen a lot of these electric vehicle stocks kind of pop. A lot of this is because of Joe Biden's presidential win. Joe Biden won the electoral vote. On the previous week. So, Joe Biden has been very, very adamant and very bullish about, electrifying the United States vehicle fleet. And of course, knowing Tesla is a global company, they sell a lot of cars in the United States and China as well, among other places, Europe as well. That's a really good sign. And also there's been some vaccine talks as well. So that's kind of been a good overall thing. So what I want to give you guys is kind of right now, Tesla stock, if we take a look at the chart, it's kind of just been flat for going on 2 months now. So perhaps if you're still holding the stock, you're probably up big like I am. I knew I bought it way back. For you guys who've been following my channel, I talked about buying Tesla stock many months ago and saying that I knew this was going to happen. Right now the global electric vehicle fleet is only at about 2%. So that means 98% of the vehicles you see on the road right now are ICE, internal combustible engine vehicles. So that means that we're only 2% of the way there. And I think for an ideal planet, we should be at least 90% electrification. So there's a lot of growth ahead, and Tesla is definitely going to be one of those leaders simply because they make an awesome product. And the easiest way to describe Tesla for you guys that are new to Tesla stock or just Tesla cars in any way is that I would say Tesla is like the Apple of cars. So just think of it like that. Think of it as just a luxury electric vehicle that a lot of people like to use. And it's also a car that maintains its purchasing power. So the reason why I want to mention these things is because I'm going to give you guys an updated. So the reason why I'm mentioning these things, I'm going to give you guys my updated price target on Tesla. And I know a lot of people have been giving price targets like around $430, or maybe even a little bit lower for some bears or people that are bullish on the stock. Maybe they say this price target is 500. I'm going to give you a price target that is just basically based on exactly what Tesla's been doing in the past and what I think they'll continue to do in the future. Before I give you guys that price target, I want to be sure you guys smash the thumbs up button if you enjoy this video. So guys, let's get right into it. And the first thing I want to do is I want to talk a little bit more about what a Joe Biden presidency will do for Tesla stock and why I think this will help reach a much higher price target. Okay, so I'm on Business Insider right now, and I found a really interesting article. It was written a few weeks back. It says Joe Biden's climate is great news for Tesla. So as you can see here, Tesla is probably the #1 company that's going to benefit from Joe Biden's plans. If you guys aren't familiar, I'm not going to talk about a lot of politics on this channel, but I will talk about some of the things that Joe Biden says and how he really plans to subsidize electric vehicles and significantly accelerate the rollout of charging stations in the United States. And this could be a boon for Tesla. So why would this be good for Tesla? Well, that's two of the things that Tesla does. Tesla, they're already basically profitable, basically on reselling those EV tax credits to other car makers. And that is definitely one of the things that Tesla has used for a long time, not just recently, but they've been making money off of that actually for the past 7 or 8 years. So I want to show you guys a little bit more about that right now. So just to explain real quickly how that works, it says how much revenue did Tesla make from regulatory credits. This article's on Stock Dividend Screener. So regulatory credits are basically issued by the government to help, push, electric vehicles. So since Tesla makes all electric vehicles, they have a ton of credits and they're able to really basically resell these credits to Ford, General Motors, and other car makers to make them because they end up avoiding a lot of fines and things like that. So that's probably one of the reasons why Tesla actually isn't on the S&P 500, because without these tax credits, they would not be profitable. But the good news is that they've been doing this for a very long time. So as you can see here, in 2019, they made about $594 million selling that. In 2018, they made $419 million. And in 2017, they made $360 million. Well, so far this year, I believe they've made over $1 billion selling tax credits. As you can see here, these regulatory credits, as kind of the past chart, you can see as the growth has increased, 41 million just in 2012, and over the years it's increased quite a bit. Okay, so as we can see here for 2020, they've made over $1 billion doing this. So, the regulatory credits revenue has continued to increase. So as you can see here in the first 3 quarters of 2020, Tesla's already raked in 1.2 billion in these credits. So, and it's thought that these credits could hit around 1.5 billion by the end of 2020. So why is this really important? Well, obviously we want these credits to continue. Tesla's making money off of them and staying profitable. And as you can see here, the ratio of regulatory credits to total revenue is decreasing. So the guys don't think that Tesla is making a huge portion of money out of this. It's just enough money from these credits to stay profitable. And that's exactly what the company's trying to do right now. I think Elon Musk and all the smart people at Tesla, I think they realize that this is a long-term game, that electrification is going to be around for at least the rest of this century. We're really not sure what will happen in the future. Perhaps they'll have some other technology, but for now, this is basically for the rest of this century. We're going to be using electric vehicles. So as long as Tesla, as many cars as Tesla can deliver and produce, that's just going to further their brand and help them establish themselves as basically the king of electric vehicles. So I think that's why it's really important, and I expect these regulatory credits to continue to grow in revenue, and having Joe Biden there, that's just a really good sign. Okay, so now moving back to the Joe Biden thing. Joe Biden's goal is to have around 550,000 charging stations. We're only around 27,000 now, so of course that's good for Tesla as well. Tesla is continuously rolling out more charging stations as well. They don't have nearly as many. The biggest leader is actually ChargePoint, which you guys can actually invest in, which is under the ticker symbol Switchback Energy, which is SBE, and that's another stock that I actually own. For me, that's just kind of a broad play on not really picking a car company, but just owning the charging stations. But all of this news is good for Tesla shareholders. And as you can see here, it says you're looking at about 20-fold increase in number of EV charging stations, which really help electric vehicle adoption. And that's good for Tesla. So, all of this is just pointing signs for Tesla, which means that for you guys that are getting a little bit impatient and the stock hasn't really done much over the last couple of months, this information should give you enough incentive to kind of hold on to the shares or potentially add to your position. So now continuing on. Okay, so I found another excellent article on electric. It says Tesla could surprise with over 500,000 cars produced in China next year. So currently Tesla is on track, or their goal for this year is to produce about 500,000 cars. And the fact that they can produce about 500,000 cars next year just in China, I think that's going to obviously send the stock through the stratosphere. And the reason it's going to do that, guys, is simply because revenue is going to increase. So the thing about Tesla is that I've showed you guys in many videos in the past, and I think it's just important to bring this up again. Stocks are really, basically shares of a real life company. So when you own a share of TSLA, it's not just a ticker symbol. It's not like game or something like that. You are a true shareholder in a real life company. So companies make money through revenue, and then the goal is to generate earnings for their shareholders. So if Tesla is actually this, ambitious to produce that many vehicles in China alone, when they're already doing around the goal is to do around 500,000 this year, and they plan to do maybe potentially 500,000 vehicles in China alone, that would send their revenue through the roof. And when the revenue goes through the roof, that's going to translate into higher stock prices, because we know that those regulatory credit revenue is going to continue to come in. And like Tesla mentioned in the Q3 report, they're looking to lower the cost of the battery and perhaps even produce cheaper cars in the future. Okay guys, so now I'm on macrotrends.net. So this is actually a really nice site. All you have to do is go to macrotrends.net, or you can just type it into Google. Usually I like to type in something like Tesla revenue macro trends. So what this data does is basically it visualizes everything, guys. So I know, if you guys know how much important a picture is, a picture really does say 1,000 words. And for some guys that are holding Tesla, perhaps they can't really understand why the stock is going up so much, or what's really causing it. It's not just hype. The revenue is really increasing. So if you take a look at this, here we're looking at a trailing 12 months revenue chart of Tesla revenue from 2009 until 2020. As you can see here, it's just going up. So what this means is that basically, quarter over quarter, where you're looking at this graph or you're looking at trailing 12 months, Tesla is just continuously increasing their revenue. So now the company has just recently become profitable with those quarterly credits, but we know that they can't generate earnings unless there's revenue increases, right? So this is what we're looking for in a company like Tesla. We're not just looking for hype. We're not just looking for, oh, EV stocks are hot. We're looking for revenue, because we know that, it's going to be difficult at times to generate earnings. But as long as revenue is continuing to increase and they can work on keeping those margins as strong as possible, the margins are already pretty slim, for just car companies in general. But if they can continue to increase the revenue, they can figure out ways to make cheaper cars in the future. Growing revenue means the product is hot. It means the product is popular. It means the product is selling. So that's really what we're looking for here. And as you can see here, if you take a look at revenue over the years, to give you guys some actual hardcore numbers, revenue's gone from 117 million in 2010 to, over 24 billion and counting. So wow, this is the type of chart that we're looking for. We're just looking for a chart that just continuously goes up. When it doesn't have too many peaks and valleys, it's just basically going up. So, that's exactly what we're looking for here. And now I'm going to give you guys a little bit of information on how I've come across my price target. So what I like to do is a lot of times I realize that, it's hard to kind of guess where stocks are going to go in the short term, but using long-term numbers, we can kind of extrapolate where the future price is going to be, assuming there's no major changes in the business. And to do this, I use Morningstar, guys. This little tool from Morningstar helps me a lot to kind of avoid emotions when I'm doing my investing and to remember to think longer term. So what I'm looking at is trailing returns. So what I want to know is, I love to see quarterly earnings reports. I love to read monthly deliveries and things like that, margins and stuff like that. But those numbers, those are going to change in the short term. What I want to see is, what is this company doing over the long run? And as we can see here, over the last 10 years, Tesla stock has returned around 56% compounded annual growth every year. So regardless of the fact that the stock is a little bit overvalued, you see the PE ratio is kind of high right now, and there's a bunch of other things people are talking about. Oh, competition is increasing, yada yada yada. But if only 2% global footprint in EV vehicle, there's enough space for everyone. I can't expect every electric vehicle sold to be a Tesla. It's just not realistic. So I'm not worried about competition. I want to see revenue increasing, because revenue increasing means people like the product. It's just as simple as that for me. So if we're looking at this, Tesla's been doing around 56%, up over 500% over the last year, and up 400% year to date. So obviously these numbers are probably not going to continue, because then Tesla would be the most valuable company in the world in just a short few years. But we can look at that long-term 10% rate. So now, using these numbers from Morningstar and presidency, with the huge increase in China vehicle sales projected for next year, and with that consistent 56% compound annual growth rate, I think that having a price target of around $600 for Tesla in 2021, I think it's very reasonable. I think it takes into account, the change in the U.S. presidency, the stable tax, regulatory credit revenue, increased revenue in China, which is the biggest electric vehicle market in the world, and that still accounts for the elevated PE ratio, guys. So like I said, a lot of value investors will say that, buying Tesla at an elevated PE ratio is just too expensive. But my rebuttal for that is that PE ratios can be expensive, but they can come down over time. So, as Tesla continues to sell more cars and continues to lower their cost of cars, that PE ratio will come down naturally. So it's understandable it's high now, because, there's a lot of hype behind the company. And I think Tesla's just getting started. It's still kind of, having an electric car is still a new thing. You don't really see too many, unless you're in like a specific community where people do that. But I still think there's a lot of growth ahead. So I'm really looking forward to Tesla's growth in the future. And I full disclosure, guys, I'm a Tesla shareholder, and I think that was a good time to add to position. I wouldn't worry right now. I wouldn't worry about a crash or anything like that. I would say if you have shares, just hold strong. If you're first time, now is a good time to get in. Joe Biden presidency, we got another 4 years ahead. There isn't any surprise why Tesla couldn't be trading at $800, $1,000 a year or two from now. It's Electrification is here to stay, and Tesla is one of the biggest beneficiaries of it. So I hope you guys enjoyed this video. So if you guys enjoyed my content and you want to see more Tesla videos, please just smash the red subscribe button. I will be posting more videos on Teslas to give you guys more information on the deliveries. And it'll be really interesting to see how Tesla closes out the year. $600 is definitely a lot higher right now, but with the company just so strong and such a clear dominant leader in the electric vehicle market, I expect great things for them. So that's it for now, guys. I hope until next time, take care.